Dr. O, want to turn our focus and attention to the labor market. Jobs are important. There's a report from LinkedIn that came out this morning. You and I are reading this again on Friday, March 21st, about workforce confidence. And the American worker is feeling less confident about their finances, about their future job prospects, and about their careers. And, this seems to be a cyclical issue, here in the United States. I mean, it's like, I think, when I graduated from college, we were in something of a mini recession. In particular, the part of the country where I lived in Western Pennsylvania, there were a lot of things that were going on that were conspiring against, good things happening in the economy. And it was really tight. It was really tough. And since then, we've seen loops and swoops in the economy.
Yeah. I mean, look, Chris, worker confidence is down. It makes sense. Quit rates are all the way down. They're at a decade low. And that's probably because hiring rates are down. Businesses are not going out to, expanding their operations and hiring workers at a time where there's so much uncertainty about what's going to happen next. And so it's showing up everywhere, right? So you're seeing it in the worker confidence, report from LinkedIn. What I love about LinkedIn is they publish this monthly thing, and they have access to all these job applications. Remember, people are actually like on the platform applying for jobs, and they can see the movement of workers. They can see the number of applications. They can see hiring. They can see layoffs in real time. And I think it's amazing. And so when you look at hiring, what you're finding out is that hiring has slowed in most metros, right? It's picked up though in some parts of the country that are doing, relative what there are places like, I'll tell you what.
Let's talk about that. Where is employment sort of still rolling along?
Texas, Dallas, Houston. Unbelievable. Like those are, those places where you still see a good activity, a good level of activity. I think it's mostly places that people are moving to, places where you're going to have, relatively more affordable housing, more inventory, places that build housing. Population growth is a big part of why, employment is growing in those places. The rest of the country though is slowing fast. We also have the federal job cuts, in the DC area, and you're looking at job applications surging in that metro because people are like, hey, the people that are either out of work or fear they're going to lose their jobs are actually applying for jobs, right? That puts a lot of competition on the, if you're in the labor market, if you're unemployed right now looking for work, that puts a lot of pressure, right? Because you got all these people, congestion. You got all these people looking for the same jobs. And so unless we have unless employers are putting out more job openings, you got a lot of pressure. And of course, that's going to drive wage growth lower, right? It's going to put downward pressure on wages. And so, yes, so you see the Fed forecast moving the unemployment rate higher, right? And you see another report I saw this morning, FedEx raising the alarm on global growth. Remember, everything that shows up at your table, dinner table, or at your front door is probably coming from one of those FedEx trucks or planes. And they're basically saying, look, revenue is down going forward. And if they're saying that, they're basically raising the alarm on growth, on economic growth, on consumption growth. And so, yeah, everything's pointing lower. Let's put it that way. I mean, I don't think we're going to, again, recessions, you can't predict when recession is coming, but I always tell people when growth slows, the risk of a recession increases. The likelihood that a small shock turns growth negative goes up when growth is already close to zero, right? Remember, we just came off of a year where growth was was above 3%. Like in December, we were talking about growth being the economy being resilient, growth being above 3%.
Right.
And now we head into this year and growth has slowed substantially. Right. And so, right. Look, I hope this is just like a little bit of jitters from a new administration coming in and that this is going to be, that we're going to be just fine. I hope so. But the longer this plays out, the worse it looks.
Well, I think I absolutely would think that there would be, some consideration about everything based on, again, the way that the way that in particular that tariffs have been reported by U.S. media so far. I think people are afraid of, the levers that are being pulled and, these like sort of equal and opposite reactions, as tariffs are applied toward a particular country. I'm not surprised that FedEx is tapping the brakes a little bit, or maybe, is looking at its numbers and they're starting to see a little bit of deterioration of the growth that has, that they have seen. I think that makes perfect sense at this time. I mean, given the fact that these policies have just been implemented.
No, look, growth slowing is one thing, right? Their forecast falling, right? Revenue falling is another. And I don't know which it is.
But I still think it's reactive. I mean, it's, if you're going
look, if you're seeing a decline in activity, right? If you're seeing a decline in activity, right? Like, I mean, we can argue with that. I mean, look, the media might report things. That's one thing. And it's, I'm agree with you that sometimes it's a little rough out there with, in terms of the reporting, in terms of like maybe the doom and gloom reporting.
Sure.
But there's also the concern that, look, if you keep prices elevated for too long and you don't see income, the right side of the budget constraint increasing, right?
That's right.
What happens to your consumption? Over time, you're like, okay, I can't buy stuff anymore. It's too expensive, right?
That's right.
And so it shows up in the real economy. So it's not, I remember on this show, I don't like speculation. I don't want to speculate.
No.
We're not going to speculate. What we saw is in January, because personal spending actually fell. It was negative. Fell almost 1%.
That's right.
And so the question is, will we see that continuing? We're going to see the PCE report coming up this week. We're going to get personal income. We're going to get personal spending. We're going to see whether or not is going down, or if it's rebounded a little bit. My hope is that it's rebounded a little bit, that growth is positive still, although, but slowing. That's my hope, in the number. At least that's my official forecast. In fact, so we just have to be very careful to see whether or not growth is just easing from a really high place, because it was pretty high, or whether or not growth is actually contracting, like negative. And if the economy is contracting, that's a problem.
Right. Time will tell. And obviously you and I are not extremists. We're not alarmists. We're not people that hit the panic button. We like data. And I think that this is something that, the truth will be revealed by the light, and it'll happen over time.